Monday, July 17th. A little late today, 10:48 California time. Usually record about an hour earlier than this. I always start out with the stock market indexes and the S&P 500 typically. And right now we are about high and last for the rally this morning, up a small 1.5, but it is close to the high for the whole trend up. And this could be a new high closing price for the trend up. And looking at the daily data chart on the S&P 500, it's left a gap behind last week. That gap is probably about to be closed very soon, I think this week, but you can't prove it by looking at the prices at the moment because we're high and last and very strong, and it may even get higher than yesterday's high. But we have now been overbought. Today's the third day, and that means be careful. It's probably going to turn around and have some sort of downside correction, and the expected price would be the high of July 11th, and that, to be exact, and that would not necessarily be appropriate, but 442.97 or 443. We should come down to about 443 very soon. And there is a chance it could come down into the high 30s, 38, 39, maybe even 37, which is the low in the last week and a half, and then turn up. One way or the other, I'm very bullish. I just don't think this is a good place to buy. I like to buy on breaks and, take profits on rallies for a bull trend. Okay. DIA in new high ground period since the rally high December 13th of 22 for the last 7 months, 8 months. Bull market. Will it stay there? We have an outside trading range with a current higher close potentially, but it's only up 88 cents, not even a full point. So it would be very easy, and the DIA has been very weak, relatively speaking, to the other indexes. It'd be very easy for it to flip-flop and close lower, in which case we will not have an official sell signal, but we will have an outside down day, a bearish engulfing, which is normally telling us the market's probably going to dip a little. There is a tiny gap, I believe, very, very small, from 4 days ago, and good support underneath the market. So I'm looking for a correction, maybe down to 337, but I'm expecting it to be in the ballpark of 342 or 343. And that's only 3 or 4 points lower than we are. We're 34600 exactly this moment. Getting in a new high ground, which we are in right this moment, and then not staying there, closing below the previous highs, let alone closing below the previous close, will be an indication that the market is starting to pull back. And the 1 minute chart is dipping for a minute or two. The Qs are much like today, the spider. And they are about to make, it looks like, another new high for a very long period of time. You have to go all the way back to January of 22. That's a year and a half ago, almost when this bear market started, to see a higher high. And that was only for October, November, December, into January a little bit, when the market topped out, and we do have an official ER sell signal on the top of the QQQ. Yes, we caught the beginning of the bear market to the exact day. And yes, we caught the beginning of the bull market, the end of the bear market to the exact day, October 13th. And I was recording these YouTubes months before October 13th last fall. And so I've got it on tape. I told you in advance about the October lows. It worked better than I would ever have guessed. Okay. Overbought 3 days now, gapped up twice on the QQQ, and we should come back at a minimum to close the lower of the two gaps at 369, let's call it. And again, there's a slim chance, 360, 1, 2, 3. Next chart, I'll go to the QQQs where I was a moment ago. So that's pretty much it. The Russell 2000, I'll mention, is again a new high ground since this February. And it broke through a resistance area last week in a classic gap breakaway manner, came down, closing the gap Friday, and now advancing into new high ground. This bull market is really great. It's not correcting, having minor short-term downside dips quite as frequently as I'm expecting. But hey, overbought conditions, blah, blah. I think we're about to have one. And then I'll scream bloody murder, be a buyer when the gaps are closed. And maybe I'll get a buy signal out of this. I kind of doubt that. Let's go to futures. S&P 500 E-mini, same as the spider, except trading hours are different. Overbought conditions, looking for a downside correction very soon. Next chart. This is bonds. We're higher on the day by a tick. We were just a little bit below Friday's lows, which was the first day down after I pegged for you guys the exact day and price level area where the market shoulda, woulda, coulda, and did bottom out. That's an 88-day line, that vertical green dashed line between various lows. And I'm going to show you the same thing on my EC forecaster chart. The green zone here is about 4.5 days to the left of the date, July 10th, and about 4.5 days to the right. The cycle is 88 days in length, and we have a series of cycle lows that are absolutely phenomenal, either exactly on the correct day or within 1 day, again and again and again. I want to move my marker just a second, offset left. Okay, that's not what I wanted. And I think I'm going to move it this way. That's what I wanted. Yep, 2 days. So the window of opportunity, the green buying zone, time frame zone, is right at the bottom, smack in the middle, most of the time for this couple of years you're looking at on the chart. I can't believe for the last 2 years, almost exactly on time, off a day or something. A couple of days early, but still in the window of opportunity. That's when you should be looking for signals, and we got one, June 16. For the cycle low, is right on time, and no signal, but timing is what I'm talking about here, was superb. Again, perfect. Again, almost exactly perfect. Just a week or so ago. And I talked about it before it happened. Even the cycle tops are darn good in the window of an opportunity. That is a tiny bit questionable. That is perfect with a bearish engulfing sell signal on top of that. That's good timing, but it's not the rally high. It is immediately before it crashed. This is not so good. And then there's a red bar way over here on the left. Can I drag this to the right? I certainly can. And that was great. That was good. Not so good. And the track record continues to be very good for years earlier. Next chart, futures in general, is the 10-year notes, which of course is almost identical to the 30-year long bond. The cycle is the same, and we turned around these last at least 4 time periods perfectly to the right day. So I'm bullish, to say the least. I think that a week ago, we may have had the lowest low in the bond futures charts for a very long years, maybe many years, time to come. This is a double or triple bottom formation. And when we start closing above the highs that we made in December, January, February, March, April, May, that's going to be the huge bullish long-term breakout. Next chart. Crude oil. I'm bearish on crude. Now, finally, it started to come down from Thursday's overbought, Friday's overbought with a lower close, and almost a red bearish ER sell signal. And today it's coming down even more, no surprise. So I think it's going to attack the lows since March, break into new low ground, and continue to trend lower after that. So next chart is heating oil. We had an outside down day, and just a second, please. We have the trade start here, just a second. We have the bear signal on Friday and a fill ER3 this morning and a profitable trade in progress, period. We didn't sell super close to the high of today, but not bad. Looking for lower levels, to say the least. The trend is down overall, and we pushed against the major bear trend line, and it stopped, along with the signal. What can I say? First bounce possible, 2.4, 2.49. Next likely area for a decent bounce, 2.3, 2.32. And then it's going to attack the lowest low for the trend at 2.13 and lower. Next, natural gas. Bear sell signal a few days ago, a little late for the entry for ER3. Remember, ER1 is always in a bull or a long or short trade whenever you see a red or green signal. And it gets in the same day as the signal. So minor new low, minor current lower quote. I'm looking for lower levels. I think it's going to make new lows for the whole trend fairly soon, week or two. Next, gold, silver, platinum, copper. Slipping down a little bit in the gold market, looking for a test of the lows we have made recently. Next, silver. Same kind of comment. We're overbought. We're starting to see for the first day it slip a little. I think it's going to keep on coming down, and I'm looking for a test of 23, 22 area and making new lows completely. Next, overbought today, first time platinum, implying it's about ready to start to slip back down with the gold and silver, and challenge 900, and that's exactly what I expect. Next, high-grade copper, big break today, got up to a little resistance previous highs, and a pretty decent resistance area at that. Didn't quite get overbought, but it came very, very close here. And it's hitting the skids today, dropping off pretty good. Expecting a test of 3.6 at least, and probably dropping below 3.5 into new low ground for many months. Next, soybeans. Now, I've been mentioning the possibility, because it really hasn't started to develop that well yet, of a huge double top formation in soybeans. We have a little double top over the last couple of weeks, maybe. But at the moment, we've got a higher high today, extremely close to the previous high, but that's the way double tops form. And we need to see it turn down very quickly. Once it starts to close below 13.15, you've got just minor downside breakout off of the small double top, and on the way down to start chewing away into support areas, closing below 10.70 is a long-term gigantic sell signal, especially if we do stop rallying here, because it'll go down in the books in the years to come as a gigantic double top. Next, soybean oil already started a bear trend, lower lows and lower highs. This has been a pretty good rally. Today, we're down for the second time since it was overbought and tried to make new highs and didn't. and it's starting to slip. So I'm looking for a close below 57.90 to get the ball rolling here in terms of downside momentum getting weaker, stronger to the downside. That would be. Next chart is soybean meal, large pennant formation developing. I'm bearish and looking for these various week-to-week important lows to be broken. Next, corn, rally, neutral RSI, 50, 60, 40 area, but a higher high and a lower close seem likely, and we could be seeing new lows for corn within just a couple of days this week. Next, wheat. I'm bearish on all the grains, can't help it. Wheat, higher high on a really good rally, and then a lower close, likely. So I'm looking for a low under 619 very soon, and a challenge of the lowest low for the trend. Next, live cattle is a bull market, higher highs, higher lows on an intermediate term basis, getting stronger and stronger. It looks like this could really skyrocket very soon. I'm sorry to say, if you like your filet mignon and so on. I wouldn't be surprised to see 200s pretty soon. Next, lean hogs. Bearish engulfing a few days ago didn't work, but we're about to see new lows since that bearish engulfing. We do get sell signals during a topping out process and not necessarily at the highest high. And that's what could have happened here. So any close below the low on July 10th is going to start to look a lot more bearish, a lot more quickly. Next, possible head and shoulder top I've talked about for a week and a half now. This last shoulder, hypothetical last shoulder high, is developing very nicely. Today, we did make a new high by just a little bit, and it doesn't want to stay there so far. It's dribbling, it's trading around levels that were below several of the highs over the last 6-7 days. If it closes lower, that's a little bit of a nail in the coffin, and oh my goodness gracious, if it closes below yesterday's low, we'll have a bearish engulfing sell signal, not an official ER red bar, because it didn't manage to get overbought. But I would think it would be heading down immediately if we can get a bearish engulfing. Next, cocoa. Not much of a comment except bullish bull trend, looking for higher levels pretty soon. Next, cotton, neutral, big sideways trading range since last November, waiting for a major breakout. Sugar to sweet, I think it can gut down all the way to that blue price range, 20 and a fraction, 20 and a half down to 18, and do it in the next few weeks. Bearish. Double top, maybe you can call it a triple top, already broke out, went down to its minimum objective, came up to resistance, and now it looks like it's turning around. Didn't quite get overbought, but I don't have to have that. Next is coffee. And we had a couple of buy signals. Nothing's working here. We're almost a new, well, it looks like we did get a new low ground by a few ticks, but at the moment, it's trading higher than the other lows. And that could be a fake bearish breakout. I'll wait until tomorrow to be a little more confident about my comment here, but it looks like this thing is going to start to fall apart and get down, down, down. And we're back to E-mini. Thank you very much. Talk to you tomorrow. Have a great day.